Alarm. Nervous network to have a price pullback before we're going to see the next massive price surge. That's what we're going to focus on today. The technicals, the psychology of the market. We pegged the last one to the T. This time we want to look at what's likely to occur next so you can maximize your upside, minimize your losses, and really anticipate what's likely to occur in the market. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been trading the Forex markets for 15 years, featured in the best-selling book, High Probability Trading Strategies, back in 2008, but now I focus on crypto. So let's dive straight in. So Nervos Network, beast of a project, but we're focusing on the technicals, right? Technicals. And I know you guys are big fans of Nervos Network. So we said Nervos Network set for a 700% return. This was on August 9th. We released this video and said, look, we likely have seen a complex correction, A, B, C, D, E, over wave 2 low, looking to make new highs. Looking to make new highs. And let's now get an update on what's happened since. Well, we pegged it. Let me just make this here we go. Look at this. Beautiful move to the upside. Beautiful move to this upside. Look at that. Boom. Right? So we pegged it pretty much bang on. Did an initial move up. It was anticipating a little pullback and then a big move up to the upside. So that's what we're going to look at today. We're going to really kind of narrow in what is this move looking like from a technical standpoint. Look, we're in the game of probabilities, not certainties. And I know a lot of you are a fan of fundamentals, powerhouse, project, fundamentals. Hey man, we love fundamentals and we love quality, utility, and everything else. But when it comes to the psychology of the market, in this infant market, which is so young, like crypto is only 12 years young, a lot of buying and selling is based on speculation, right? And that is represented in the price action, which represents psychology. The psychology tells us a lot of information. So I want to now help you out with this. What is this? What should we anticipate over the next coming few weeks? And then what should we anticipate next? Because I said, look, we're likely to get a pullback before we see a surge. And that's important to note, because if you're managing your expectations, it doesn't matter if it's the best project on the planet. You know, even Bitcoin has massive pullbacks. Ethereum has massive pullbacks. Nervos Network, well, look, massive pullback, right? And often, the crazy part is, during this massive pullback, the project has probably increased. The project has increased in value, more development, more coding, more releases, etc., etc. But because of the nature of the markets, buying and selling, a lot of it is based on speculation. So we want to be aware of that. So let's now just dive into the top left, which is the weekly chart. We're going to look at the momentum indicator. But first of all, look at this. Look at this high and this indicator. When we had the blue line crossing beneath the red, we had this big correction. We had another one down here. This high pretty much married up nicely with this one here. And now we've got this next one, right? We've got this next high over here. We want to be aware of that. This tells us that the momentum to the upside is limited and we should expect sideways to down, right? Very, very, very important. That's objective information, right? So it's moving away from opinions and we're moving from objective information. So now we want to look at this over here as well. I'm going to zoom into this part of the market. Now that we've done this analysis, we don't need this information here no more. We can just delete this. Let's clean up the chart. Boom, boom. Let's clean this up. We'll keep this wave 2 here. We're going to keep the question mark here still. Really because the wave 2 hasn't been confirmed. So we need to be okay with that. We need to be okay that Nervos Network has made a complex correction. Now this is complex. This A, B, C, D, E. We might see a move up and then a move to the downside. But I'm going to tell you why I don't believe that's going to be the case and why I believe this is going to hold, because there's some technicals. So when I say hold, we are saying that we should not see price go below this point. If we do, we need to reevaluate, but there's a couple of things. First thing is, all previous moves to the upside in this whole sequence to the downside, so during this whole downward movement, these sequences to the upside are in 3 waves. A, B, C. Movement to the upside, A, B, C. However, this last movement to the upside doesn't look like an ABC structure. What it looks like is more of an impulsive structure, meaning a 1, 2. I'm doing it this way because I just want to already get this point across, because we are going via objective information to help us make decisions, right? 4, 5. And by the way, if you haven't taken my Elliot and Fibonacci masterclass, it's free. It's in the link below. It just teaches you how to do some of this stuff so you can do it live, because sometimes my videos, I can't get them out fast enough, and you might need the information straight away. So what we're looking at here is this 5-wave structure. That's important information. Also, what we want to look at is between here and here, the price has moved up, but the momentum has moved down. That's called divergence, which shows there's a bit of weakness. It's running out of short-term steam, so we should expect price to come down. The market needs a bit of a rest, call it a breather, call it a correction, and then I anticipate the next price surge. And we can articulate that quite nicely. So what I'm going to do to finish up today is get onto the hourly chart. Let's get rid of all this now. Let's get rid of all this. We don't need this. We don't need this. We can get rid of this info. What we're going to do is zoom in here. I'm going to focus on this part of the market. Focus on this part of the market. I like to use candlesticks on lower time frames because we get the daily ranges, and whereas higher time frames, best practice to use closing day data. What do we see here? Right, so this is what we're drawing. A nice wave 1, a wave 2, we can call it a wave A, B, C, yeah, wave 2, a nice wave 3, and clean, very clean A, B, C of a wave 4. And then we have this blow off top here. Boom. This often, by the way, is what you refer to as panic buying. FOMO, fear of missing out. That's normally an end of a 5th wave. Wave 4s are very common. It's a profit-taking wave. People are taking profits. Who are taking profits? Well, the people that manage to read the market and buy down here, right? Because even from here, the price was 0.007, and up here was 0.01. So what's that? 2x? Is that right? 2x, give or take, 3x. Bit of profit taking, and then major profit taking at this end of wave 5. So what I'm going to do for you today to finish up is, I said, look, likely to get a price pullback, and I'm not just shooting the breeze to say, hey, look, I feel like it's going to pull back for no reason. I'm saying weekly momentum is overbought and bearish. Daily momentum, divergence. We got a 5-wave pattern, A, B, 1, 2, 3, 4, 5. What follows a 1, 2, 3, 4, 5 sequence? Typically, it's a 3-wave correction, A, B, C. That's what we're going to look at today. So first of all, let's just do our price projection for our end of wave 5. Again, I covered this in the free Elliot Wave Fibonacci masterclass, so you can do some of this yourself. We're going to measure wave, let me just make sure I got the right one. We're going to measure beginning of wave 1, end of wave 3. And typical wave 5 is typically 62%, and maximum is 100%. Right, and that's what this is. Right, so we've got this nice range over here. Right, nice range ahead of time. And then we're going to measure wave 1 in itself and project it forward from the end of wave 4. And most common is actually 100% and 162%. Right. So now we've got this cluster here. So this is showing great high probability. Often we'll do this in advance. Here we're doing it in slight hindsight because the market has moved down already. Now we want to, this is more just giving us confirmation on, is this likely to be a wave 5 high? And then we can anticipate a correction, and then we can measure what that correction is going to look like. So this external retracement is 1.618, again, right into that cluster zone, right? So we've got this very high confluence of events over here in terms of price. We've got weekly momentum, we've got daily momentum, we've got divergence, we've got pattern, and that's more than enough information. And we've also got this move to the downside. Look, there's a sell-off happening already. You can see it happening. So what we're going to do now is we can anticipate with high probability, we can get rid of this one, that this is a wave 5 high that should hold. And before we see new highs being exceeded, new price move above this point, we need a breather. We need some correction. I say we need, that's what typically happens. So we're going to finish up on 52%, so 50 to 78.6% retracement. But let me do it from here. What we want is 50%, 62%, and 78.6. These are the 3 typical zones. What is this? Let's get rid of that. And then we've got time. Now, if this is the wave 5 high, which it looks like it's going to be, in terms of probability, we want to measure the beginning of this wave 1, end of wave 5. It's like a wave 5 over wave 1. And the typical minimum time taken for a correction is 50% of the previous sequence to a maximum of 100%. I mean, we should always anticipate 3 waves. So even though we've got this correction, this movement to the downside, which is the biggest move to the downside that we've had for a while, like it's very steep also. Look how steep it is. It's literally like a real big sell-off, bigger than this. But it's only a first wave, and it's a very impulsive wave, and we want to refer to that as a wave A. Then we'll probably see some type of correction to the correction, which is a wave B. And then we'll find, more often than not, we'll get a third wave into this zone. And if and when this structure unfolds, we can then peg more accurately where is it likely to end in terms of time and price, so you can manage your position. So if you're riding this out, it gives you a bit of comfort to know, right, it's likely that we're going to see price of Nervos Network going below 14 cents and to maybe even as low as, sorry, did I say, so 1.3 cents or 0.0136 to 0.01, right? Whether you love the project or not, whether it's the best thing since sliced bread, we're just talking pure technicals here, pure psychology here, pure buying and selling, profit taking is the nature of the markets. You know, you can see it here, you can just see it, right? It doesn't just move in one direction, it's just natural and normal. The things that you want to be aware of is that when the correction of a wave 2 happens, it's normally bigger than any previous correction in both time and price. These are the previous corrections within the wave. So we can see that it's bigger already, like it's bigger already. Anything else that I want to cover with you? No, I think that's it. We got the end of wave 5. Amazing project. I mean, I've done some reading around it, but my speciality, just so you know, is technicals. Elliot wave Fibonacci. That's where I've spent pretty much 15 years on all markets. When crypto, it applies incredibly well. I think it's mainly because it's an infant market. Yeah, look at this. So actually, we'll do one last thing. We'll do one last thing for the fun of it. I'm just going to zoom in over here. And we can see they have to move down and move up and move down and move up and then move down. So we can project the end of a wave 5 of a wave A. This looks like a wave A sequence. So don't be fooled. It's not the completion of a correction. We always, anything can happen, but we always anticipate 3 waves. And this is an impulsive wave and this is the first wave. So we can actually do 2 things and we'll finish on this. An external retracement for an end of wave 4 to an end of wave 5, where we are measuring a wave 4. That's the relationship, and it's typically this range. Yeah, in this range. And often we'll also see measuring this top to this bottom, wave 1 to wave, what looks like a wave 3 from a wave 4. And the 2 typical ranges is 62% and 100%. Right, 62% is probably going to be the one. The minimum is 38%. You can see that falls into these ranges. So we're probably going to see a wave A coming towards some type of local low over here or here. That's going to be the high probability. And then we should anticipate, but let me just pull up the momentum indicator here. Let me just have a look at this again. Yeah, so we'll still probably see sideways to down. Just checking a couple of things here. Because some people, if you might be trading this on a very short-term time frame. If you're not, then this is irrelevant. It's going to ride it out. But here we should probably see a low. Yeah, it's probably going to be likely here. Just want to do this here. Just hang with me here. All right, cool. I'm just doing this on an hourly time frame. I just want to see the largest swings. High, low, high, low. Yeah, it's probably going to get down to this range down here. Again, typical maximum is 100%. So we do have a third zone also that we want to be aware of. There's 3 zones. And I'm drawing this one in mainly because you often see it will coincide. You see how this low and this low, they coincide quite nicely, more often than not. So we should anticipate the next one because it's sideways to down, the momentum is down. Here is a lagging indicator, but that's just the nature of it. So we're probably gonna see movements coming down to this region. Yep, and then so like we said, something like this. Then we should anticipate a move to the upside. A lot of people think that's the continuation of the new trend. Is more often than not the case. I reckon it might even drag out a little more like this. Then we'll see a correction, and then we'll see something very similar to this, like this. Yeah, so let's summarize on that so you can take a snapshot. That's, again, it's not guaranteed, it's just probabilities, but looking at CKB, Nervos Network, we know it's a powerhouse project, and I know you're very optimistic about it. I've been reading your comments, and I love your comments, but from a psychological standpoint, from a technical standpoint, we should expect a breather correction. But the good news is, after a wave, let's just go back to a daily chart. After a wave 2, so a wave 1, let me just make sure this is clear. So I like to have this clear, especially because we'll do a follow-up on this. This is like a wave 1, as we're saying, wave 1. And then we're anticipating we have got the beginnings of a wave 2 on a more micro level. As I want to say micro level, I mean compared to the previous wave 2. And then we should anticipate a wave 3 if this correction occurs this way. This is what I'm anticipating. And then we'll see this, and it'll be often bigger than the previous move to the upside. So there you have it. Nervos Network, anticipate a pullback. It's already occurring. It's already begun. We can see it. It's already begun. It's not over yet. I say, again, the 2 dates that we said was 9th of September, sideways to down. Anticipate, be patient for that moment. It might be longer than anyone wants, but that's just what it is. But we'll see how it unfolds. And then anticipate the next price surge, which we'll see this. And if it occurs like this, we'll do an updated analysis nearer the time to see how it goes. So if you like today's video, like, subscribe, hit the bell notification. If you haven't already, take my free Elliot Way of Fibonacci masterclass. One, it will allow you to understand a bit more what I'm doing, how I'm doing it, why I'm doing it, but also give you the skill set to do it yourself. Right, let's finish on a quote. Let's go to chapter 3 today. Chapter 3. What was chapter 3? That's chapter 1, 2. This is my book. Here we go. Chapter 3 is called There is a Solution, and it's called the TRCP. Don't worry about that. I'm going to go on this. This is one of my favorite quotes. It does not matter how slowly you go, as long as you do not stop. Who do you think said that? It was Confucius. It does not matter how slowly you go, as long as you do not stop. You're either progressing or you're retracing backwards. You're either growing or you're dying. And I love to be growing. So keep up the good work. Keep working. Making money and losing money is a part of making money. As part of the lessons and everything else. So if there's been occurrences where you've lost money, hey, it's just part of the lesson, part of the game, and it'll make you stronger. So keep moving forward, keep progressing, and I'll see you soon.